All right, let's chat property. Welcome to Property Chat with Pete, episode number 2. Today we'll be talking about the interest rate rises that are taking place and potentially people who are coming off their fixed rates and making sure that you are looking at all your options. So yeah, let's get into it. So today they announced that the interest rate rise recommendation by the RBA, is set to go by 25 basis points, taking the cash rate to 4.10%. Now, again, this is only a recommendation. The banks don't have to apply that change. So make sure that you understand that. And if your bank is applying that change and you find that there's other banks that aren't applying that change, here are some options that you can look at to make sure that you're across it and where to go from here to help you in your mortgage journey. Having a mortgage is a very important, big thing for a lot of people. It's the biggest decisions they've ever made. It's a decision that will essentially set you up for the next 30 years. So you need to make sure that you're in a mortgage that's going to benefit you and set you up from a wealth perspective and not negatively affect your financial situation. So before thinking about selling your property, it's important to make sure that you understand your options. Here's some options that you can consider. First and foremost, like I mentioned, is review your rate. Okay, have a look online if you will, or speak to your mortgage broker, get to understand who's offering the best rates and cashbacks, and then have a look to see whether or not it's going to suit your situation. Make sure that you shop around before actually just settling for the worst case scenario. Shop around, get a better rate, and that will potentially help set you up for the future. Reviewing your rate could potentially also, when it does give you that cashback offer, the cashback offer could set you up so that you can find yourself in a neutral base again, where you don't have to worry about that extra bit. You can chuck that straight into your mortgage to offset it as fluid funds, offsetting the mortgage, and therefore offsetting the increase in the potential mortgage rate that would be applied to you. Even if it is you're getting the same rate that your bank would be increasing their rates to, that offset or that ability to get that cashback could set you up to be in a neutral space, so you don't have to worry about that increase. Okay. Another option to talk to your banker or to your mortgage broker about is interest only. Whether or not you're an investor or an owner-occupier, both owner-occupiers and investors have the option to set their loan on an interest-only term for up to 5 years. This is something you need to talk to your bank about. If you have already in the past used interest only, potentially your bank may say, sorry, you can't do it again. And if they do, guess what? You can go to another bank and ask them to help you to do it and have a look to see what their rates are. Again, if you set yourself up on an interest-only loan, and if it's your first time doing so and you are comfortable paying the principal and interest, what you could do as an option to try and just get yourself into a positive state, especially if you don't have an emergency fund, is make sure that the principal you normally would have paid, put that aside in a separate account, offsetting the mortgage while it's on interest only. So it's offsetting the mortgage, but it's fluid and accessible to you if for whatever reason you need to access those funds. And while it's sitting there, it's still working in your benefit, offsetting the mortgage, so you're paying less in interest. Okay. Another thing you can think about as well is splitting the loan. So if you're coming off your fixed term, it's a good thing to be on fixed sometimes not. But if you're in a fixed term, if you're thinking about whether or not you want that fixed rate just to give yourself some sort of security, and oftentimes the rate on fixed is better than what you're paying on a variable rate loan, you can set it up in a way that you can split it. Okay, you can go 50-50, 50% fixed, 50% variable, or you can go 70-30. And then whatever you leave as a variable rate, you could then have that potentially as a revolving credit facility that you're using as an overdraft. Speak to your mortgage broker or bank about that, or speak to me. Get in touch via peterharleyconsulting.com. And what you could then do is, if there's a variable part of it that's a little bit there, you can throw as much money as you want into it up until obviously it's paid off completely without getting penalized. Whereas if you have a fixed rate loan, you oftentimes can only put in a certain amount because the banks normally use that fixed rate loan as assurance to whatever other lending they may go and fetch from other banks, or if you will, overseas. Okay, next thing you need to do is potentially you could look as a resort, you could rent-vest. If you can't afford your mortgage at the moment, you could rent-vest. You can still keep your property, put the loan on interest only, use that whatever principal but you would have paid to it, and put it aside to either pay for rent, or you could put it aside to offset the mortgage while you are getting rent from someone actually living in the property, paying the mortgage on your behalf. That is another option you could do. I know it's not the greatest potentially. It might be unsettling, but there's an option there available. As at least you don't have to sell the property and you still have it. As the capital grows, you can make use of that capital and still benefit from that perspective. All right, Airbnb is the next option. Airbnb could be something you could temporarily do, especially if you need temporary relief, where you potentially need some money just to get yourself through a situation. Or you just want to get some extra money so that you don't find yourself in a place where you have financial strain. You can Airbnb your property, get that extra income. You can temporarily go live somewhere else, whether it's parents, whether it's friends, whether it's a relative, or if you're visiting overseas or you're going away on holiday, if you can work remotely, you potentially have that option where you can Airbnb your property and have someone pay it off for you with depending on what it is that you can get for it. But make sure that you do your research and you know what you potentially can get for it on Airbnb, and also how to set your property up so that it's still safe and secure from an Airbnb perspective as well. Okay, so those are some options you can think about versus actually going to sell the property. You can find ways to still afford the property while you're going through all these changes, etc. Again, if you need help with any of this, I've got quite a few different professionals who can assist you, professionals who know what they're doing, who have worked with investors. They can set your tax up in a way that it's more efficient for you, where you start making a passive income versus you having to pay into it, set you up for positive cash flow. There's a lot of things you can do, but it's important you've got the right professionals by your side who can help you along the way. Make sure you go to my website, peterharleyconsulting.com, and inquire there. But yeah, it's been great chatting to you again. Wishing you all the best on your property journey, and let's chat property again next time.